The bullish hammer harami signal of last Thursday pretty much told us that on bullish confirmation, the bulls have supported here at the 50-day moving average. The fact that on Friday they were able to close the markets up above the T-line gave us more important information. Number one, with a bullish signal and a close above the T-line, the probabilities that we are still in an uptrend, which has been the characteristic of this market for the last few months, where it stays above the T-line, pulls back, comes back up above the T-line, moves up until it pulls back. Now we're back up above the T-line, basically telling us that the overall market is in an uptrend and it has some profit-taking pullbacks. These profit-taking pullbacks are very good for the market in that it does not allow exuberance to get into the market. It maintains a very strong, steady uptrend. The NASDAQ confirmed the same characteristics. It did a bullish harami hammer type signal. Stochastics curling back up, a close above the T-line. Now today's trading as a doji told us that they weren't resisting at this level, they'd broken out. A doji is very informational in the sense that if it opens positive tomorrow, we know what type of day we should have. Another bullish day of the same magnitude as this day, basically known as a doji sandwich. If that's the case, that takes us well up above the T-line and moves us back up into the trajectory of the trend prior to the pullback. The doji sandwich is very important because it basically tells you what is going to occur in investor sentiment that has occurred many times before. A big strong bullish day with stochastics heading up, a doji. The next day, if it trades bullish, it's going to be the same magnitude as the prior day. That does two things. It allows for instant participation into a price move based upon it trading positive after a doji, number one. And number two, it allows us to know the magnitude of that move. So for even a day trade, this is a very significant, high probability trade result. Then, the result after a doji sandwich is usually much more follow through with the anticipation that we're heading for the next target, the 200-day moving average. And as illustrated in the RDN chart, a big bullish engulfing signal right off the 50-day moving average, stochastics curling up, a doji that closed right on the T-line. This makes it very simple. If it opens positive, we've got the potential of a doji sandwich. If it opens positive, we already know it's probably going to move in the direction of how they open it after a doji. If it opens positive, it tells us the T-line is not acting as resistance anymore, and this downtrending channel is not going to act as resistance. Plus, if we know there's more upside after a doji sandwich, we know that this area is going to be broken out, and if this is wave 1, wave 3 is going to be equivalent. This is not rocket science. This is just taking common sense, reoccurring patterns, and applying them with the signals, knowing what should happen after each signal and what type of pattern it creates. This is what puts you in the right place at the right time. There was numerous trades today that were up very strong, even though the market was flat, based upon recognizing what type of signal pattern they were creating. That'll be it. We'll see you in the chat rooms.